Are you bombarded with cryptocurrency terms and wondering what they all mean? If you are a beginner in the cryptocurrency space, I bet there are certain crypto terms you come across and you wonder what the heck the term means. I realize that sometimes we take a lot of things for granted. We assume people are familiar with all the terms and lingo we use when we describe or explain things, when that is truly not the case. So in this video, I will be presenting some of the most popular crypto terms you should know and be aware of before you consider investing. The more you familiarize yourself with these terms, the more you will come to understand this huge technological industry that is our present and our future. So as we always like to say here, you should never invest more money in cryptocurrency than you can afford to lose, and experts advise allocating not more than 5% of your portfolio to these digital assets. But let's dive into understanding the industry lingo. Number one, address or wallet address. We hear address, wallet address all the time. So what is it? It's a unique identifier used to transact upon a blockchain network. Wallet addresses are represented by alphanumeric characters, which could also be represented as a scannable QR code. Altcoin. An altcoin is short for alternative coin, so it's a term used to denote any cryptocurrency other than Bitcoin. The second most popular cryptocurrency, Ethereum, as well as any of the thousands of tokens with extremely low market values, can be considered as altcoins. Airdrop. The distribution of free crypto tokens to promote a new project or encourage community adoption is known as airdrop. ATH, or sometimes referred to as all-time high. And ATH stands for all-time high, and it refers to the highest trading price of a certain equity, stock, cryptocurrency, etc. Bag holder. A bag holder refers to someone who tried to sell at a higher price, but the market moved too fast and they got left with a coin that is now a significantly lower value than they paid for it. Bitcoin. Bitcoin is the first and most popular or most valuable cryptocurrency in terms of market capitalization. It was launched on January 3, 2009. It's the first and biggest crypto in the world in terms of market capitalization, created in 2009 under the alias Satoshi Nakamoto by an unknown person. So buy the dip. What is buy the dip? It's an investing strategy which involves buying an asset when its price has fallen to reap the benefits when its price rises again. Blockchain. Blockchain is a digital format for preserving records and the technology that supports cryptocurrency. So using successive blocks that build upon one another, a blockchain creates a permanent, unchangeable record of all transactions or other data. Blocks. So what are blocks? Blocks are groups of data within a blockchain. On cryptocurrency blockchains, blocks are made up of transaction records as users buy or sell coins. Each block can hold only a certain amount of information. Once it reaches that limit, a new block is formed to continue the chain. What is a bear market? When we hear the term bear market, it's a prolonged period of falling prices. It's generally when token prices are low, it is considered a bear market, or the market is bearish. A bull market, it refers to a prolonged period of rising prices. Generally, when token prices are high and on the increase, we say it is a bull market or we are having a bull run. Coin. So a coin is a representative of a digital value that resides on a certain blockchain or cryptocurrency network. Some blockchains like Bitcoin, they use the same name for both the network and the currency. However, there are others that use distinct names for each. such as the Lumen native coin of the Stellar network. So in this case, the coin is Lumen, and then the network is Stellar network. Coinbase. So Coinbase is a popular USA-based centralized cryptocurrency exchange. Coinbase made history recently, or it made history actually, as the first cryptocurrency exchange to go public on the NASDAQ. Cold wallet. Cold wallet is a physical storage device such as a flash drive, hard drive, or solid-state drive used to store cryptocurrency offline. Now, cryptocurrency. What is the term cryptocurrency? It is a type of currency that's digital or decentralized. Cryptocurrency can be used to buy and sell things, or it can be used as a long-term store of value. Cryptography is the scientific study and practice of encoding and decoding data. So a method of keeping information secret and secure by scrambling it into indecipherable codes. The information can only be decrypted and read with the necessary key. That's cryptography. Now, there's a term that can be used in the crypto world, but it's used a lot in the finance world, and it's 401k plan. So I'd like to just add that one here. A 401k plan is a retirement program in the United States offered by employers. So with a 401k plan, employers can get tax breaks on the funds they contribute. Or rather, employees can get tax breaks on the funds they contribute. So contributions are automatically taken from the paychecks. These are then invested in funds that the employee picks from a list available to them. So the equivalent of a 401k plan in Canada is referred to as the RRSP, that is the Registered Retirement Savings Plan. So many people have questioned if they may invest in Bitcoin through a 401k due to the rising popularity of cryptocurrencies and blockchain technologies. And recently, some investment companies have made that possible. So now a 401k plan can be used to invest in Bitcoin, in cryptocurrency. So that's why I included it here. Now, in order to keep this video short and the words easily accessible, I have decided to make this a series and make more videos until we cover most of the crypto slangs and terms. So look out for more videos on this series. And until next time, keep learning and have a wonderful day. Bye.